So we made it through week 34 in my small account. I have a negative beta weighted delta, and I want to explain why I do and the moves that I made to get there and my thoughts on the market for the coming week ahead. Let's take a look. So we're up 1.08% on the week. That's my net liquidation at $12,769. I've collected a net total of $65 in premium, and I'm only down 20% now. So that brings us around week 30. So we're about break even on the past 4 weeks. We can see my graph here on my net liquidation that I am still approaching that target line for the end of the year. I want to make the money back that I have lost and have what I had at the beginning of this year. So that's around $16,000. We are on track there, a little off target, but on track. Tracking my premium for the week. It was really high last week. We were at like $818, and then now we're only at $38. So we see kind of the waves there. I wasn't as active in my trading last week versus the previous week, and that's just because I already had a bunch of open positions, and it was more or less closing and just managing at that point. Taking a look at the platform, you can see my positions here. Everything is up. The market responded well to Jackson Hole, which, not a huge deal for me, but anyways, the market was overall pretty positive on the news there. And so everything is up. And I closed my Chewy position. So I had 100 shares that I owned, and I was selling calls against it. It went in the money. And then I decided to go ahead and close that position. It expired Saturday. And now, whenever I had a positive 3 or 4 or 5 beta weighted delta, now I have a negative beta weighted delta. And I'm not too worried about that. It's actually the first time that my account has been negative. And the other part of it being negative is because the market has gone up overall, especially on Friday. And I do need to work on that theta. I've only got $13 in theta. I want to be shooting for more of the $15, $16 a day in theta. Because I closed that position on Chewy, I have 44.8% buying power usage. So that before was around 54. That's good to see as well, because I want to stay in that 40% range and maybe move up to 50% when the market is really rich in premium. So, but default, I want to stay around that 40% range in my small account. So pulling up the monthly chart on the SPY, we can see that the volume is lightening up here. Even though the price is going up, we aren't seeing a whole lot of people putting money into it. So that's kind of a red flag for me. I want to see strong volume and the price responding as well. So you can see back here in the previous months, looking back at 2022, 2023, the volume is at 160 even, 180, and now we're down to like 150. So we're down pretty low compared to the past. And so that's kind of a red flag for me. I'm starting to see that even though the price is going up, the volume's down, there's not a whole lot of energy there. And so I can see some risk to the downside because of that volume being so light and the price being up like it is. So I'm not too worried about being a negative on my delta. I've got some calls that I need to adjust because I think I joined the bearish side pretty early. So I do have some in the money calls here that I'm managing. But nonetheless, I'm just letting the time roll out. 21 days to expiration, and then I'll close it. I've got one at 19 days. I decided to hold it over the weekend just to see what would happen. They're only $1 wide credit spread, and I'm actually widening out my credit spreads to $2, maybe even $3, to give myself more of a chance of success there. Doing just dollar wide spreads is more of a make or break. So the wider you go, the more risk you take, but the higher likelihood of being profitable there with the risk. So managing that, I know I've got a big enough account to be able to handle $2 wide, $3 wide spreads, so I'm not too worried about that. Speaking of my credit spreads, overall, we can see on the graph here, so you can see I've been down and crawling my way back up to break even, and I'm just about there, and that's because I have been widening out my spread. My sell width, which is just the width of the credit spread, has been $1, and now I've widened it out to $2 and even $2.50 on AMD. So I am widening that out, and that's making my winners bigger. And that's the other part too, having the richer premium for the risk. And I don't expect to have a max loss on my credit spreads because I am closing at 21 days to expiration. So I am able to pretty much cut my risk in half doing that. So I've been trading 0 days to expiration 3 times a week, and it's not proving to be very successful so far. I've got about 15 occurrences right now, so I need more than that. I'm going to continue to trade it, But right now, I've got a 67% win rate and an average P&L of negative 8.13. So when I win on average, it's $14. When I lose, it's 51.4. So yeah, it's high probability, right? I'm greater than 50-50, but whenever I lose, I'm losing more than when I win. The other question I've got about that is how long do I just hold on to the trade? My loser on Thursday was $94, and it's because I held on to it for 3 hours until 12 o'clock. And if I would have closed that position at 10 o'clock, 11 o'clock, would I have lost the same amount? The other thing that I've done is tightened my sell spread, my put call width. Instead of doing $7 wide, which is about 3 strikes up and 3 strikes down, I've been tightening it up to 2 strikes wide up and down. So the gap is only 2 strikes. I've been tightening that up just because the premium is not as high. So even though my 0 days to expiration iron condors are not successful, it makes me look at how long I hold on to the trade. Imagine if I close my trade after 2 hours or maybe an hour and a half. How would this look? Just by looking at it by time frame. My biggest loser here is $94, and I held on to it for 3 hours. If I would have closed that at 2 hours, then as a loser, I probably wouldn't have lost as much. And then the same thing here. I had a loser. I held on to it for almost 4 hours, and it was a loss of $26. What would happen if I would have closed that at 1.5 hours to 2 hours? I had a winner here at almost 3 hours there, $11. So I would have canceled that one out. But really looking at my losers, if I would have done that, I would have limited my loss. You see here, I had a loser at 1.5 hours, so I would have taken that on. But overall, I mean, I think I would have been more successful if I would have closed my trades out earlier than holding on till noon. You know, if I just waited until the time passed, whether it's a winner or a loser, if it reaches 2 hours, then it's time to pull the plug. And so that was kind of my plan from the beginning, but I just decided to hold on to it. You know, I don't watch it all the time. And so I didn't have a chance to actually close that position until noon. So that might be another factor. But either way, that's going to be my plan, is to really monitor that time frame whenever I'm placing the trade. And whenever the time comes to close it, it doesn't matter if I hit my profit target or not. It's time to just close that position and move on. I think I can limit my losses there doing that. So that's going to be the key there, is try to reduce my average loser down closer to my average winner. And so even if it goes down to 28, right, that's going to be a winning trade more or less. So I want to try to get back to break even. And I think the way that I do that is to limit those losses. And using the time frame, I think, is going to be a key level to be able to reduce that on the 0 days to expiration right now. So that's week 34 in the books. My portfolio is negative delta. I'm expecting the market to go down because we have light volume with the prices going up, and I'm continuing to do credit spreads, widening out those spreads, and then continuing to do 0 days to expiration iron condors. The goal there is going to be to limit those losses, and that is by closing the trade early, even when it's a loser. So if this video was a help to you, hit the like button. And if you want to follow along my trading journey for this year, hit that subscribe button, and we will see you in the next video.